Hello, my name is Jim Fortune, and this is a trade review video brought to you by FFTUG.com. Before we get into the video, I'd like to read our disclaimer that futures and Forex trading may have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy, sell futures or Forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. The past performance of any trading system or methodology is not necessarily indicative of future results. CFTC Rule 4.41, hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Any and all information contained in the FFTUG.com website is compiled for the convenience and use of the site's visitors and subscribers. It is provided without responsibility for its accuracy. Any site visitor or subscriber having access to information contained within this website is under the strict condition that any errors or omissions shall not provide the basis of any claim, demand, or cause of action against FFTUG LLC, FFTUG.com, or anyone affiliated therewith. Now that we've got the disclaimers out of the way, I'd like to discuss a trade that I made, and I'd like to tell you that even although our disclaimer says that we do simulated trading and we do real, that simulated tradings have, they can't really be based, it's not based on fact. This particular trade tonight that I'm showing you was a live trade. This was a live trade that I made today. I was in the FFTUG.com chat room, and some people were talking in the chat room, and they were talking about NQ. Now NQ up here is the instrument, and you can see that right up here. It says NQ. Actually, it also says NQ right here. And so you can see that's NQ. That's the NASDAQ index. So we're doing futures on the NASDAQ. You can do futures on the S&P 500. You can do it on the NASDAQ. You can do futures on the Russell. So there are several different indexes that you can do futures on. This happens to be NQ, which is the NASDAQ. Now, the trade that I'm going to go over with you tonight is on the NASDAQ. And we'll go over this trade because the people in the room were talking, and I was kind of listening in the background. I have never traded NQ. Now, there's a good reason for that. So, let me tell you what the good reason is. The ticks on the ticks are every movement of price action on the order tool. So let me show you the order tool. Now I'm going to show you, this is a simulated, this is the order tool that you use on the simulator. Looks like this. And this is just a JPG. There's no action in here, so just to keep this steady so I can point to it. But this is the order tool that you use for the simulated dome. And for every movement on this dome is a tick. So right now where it's gray here and where it's yellow here, if you start at the yellow and you count backwards, and you count from 9 3.960 to 959. That's the difference between that is 1 tick. 1 tick on the NQ is $5. So if you can look at the market and you think the market's going to go in a certain direction, and you think you can make 4 ticks, you're going to make 4 ticks times $5. You're going to make $20. That's really not too bad. Now I have to be honest. The converse of that is that if you think the market's going to go from 960, from 3.960, if you think it's going to go up to 3.964, and you're going to make 4 ticks, you're going to make 1, 2, 3, 4. So you're going to make those 4 ticks. That's $20. If the market goes against you, well, you could lose 4 ticks. 1, 2, 3, 4. And you could get out at 3.956. So you can either make $20 or you could lose $20. Now my instrument of choice is 6S. 6S is a currency. The S stands for the Swiss franc. There's 6S, there's 6E for the euro, there's 6J for the Japanese yen, and those 3 currencies pay $12.50 per tick. So on 4 ticks, rather than make $20, you can make $50. Now, if I'm going to look at the market and I'm going to analyze the market and I'm going to try to determine which way the market's going to go, do I want to spend that time and that effort on 4 ticks to make $20 or to make $50? This is what that looks like, just so you have an idea. Okay. So here we have the NQ. 1 tick is $5. 4 ticks is $20. Here's 6S. 1 tick is $12.50. 4 ticks is $50. And you can look at this and you can think, well, you know, if I lose and the market goes against me, if I think it's going to go down and it goes up, and I take a 4 tick loss, you're going to lose $25. Because generally you're going to pay $5 on a trade in either this NQ, or you're going to pay $5 in 6S. So if you're wrong and you lose 4 ticks, 4 ticks is $50 plus 5 for commission. You're going to be out $55. And some change. Here on NQ, you're going to have the same. You're going to pay the same commission. And that commission is going to equal $25. So would you rather, if you're going to lose money, would you rather lose $25 or $55? Well, yeah, okay. I can understand the rationale. I can see where people are coming from. But I'm not in business to lose money. I don't think anybody that trades futures to lose money. They do lose money, and we'll discuss ways that they lose money. But people, I don't think, are in the business to lose money. They're in the business to make money. And if I'm in the business to make money, I want to make as much money as I can. Okay, let's talk about the trade. We talked about the fact that there are hypothetical trades and simulated trades. I'm gonna talk to you tonight about a live trade that I made in the market today, May 9th, 2013. I made it in the in NQ, and this is the trade that I made. You can see here that I bought 295125, and you can see probably up here 2952.25. Now I got into that trade, and I got into that trade over here at 642. If you look at the bottom of the chart, where I've got this ellipsis right here, you can see that when I entered the trade right here on this candle right here, where I've got my circle, and I got in at 642, and I got in based on this indicator right here. This is what I call this my leading indicator. I got to tell you, leading is not the name of the indicator. Leading is what I call this indicator, but I named it leading. And it's leading because most of the indicators on charts are lagging. They're lagging indicators, and by lagging I mean that this bar usually is printing the colors, and then the event occurs, and then this graph, these lines, print out. And so after the event happens, these lines come out. So all these indicators here are all lagging indicators. They don't forecast. This particular indicator here down at the very, very bottom of the chart is a leading indicator. It attempts to make some determination of which way the market is going. These are panels. I don't know if you know that, but this top section here with these candlesticks are, and I've got this dotted orange and this dotted green. That's swing high and swing low indicators. That's what those two indicators are. This little blue squiggly line and this little red squiggly line, that's an indicator called the ANA trend line. I don't remember the exact name, but that's what it is. It's a trend line indicator. And so I've got trend lines on here to kind of give me an idea. I've got moving averages, and these are just standard moving averages. And I'll probably be producing a video showing you how I build this chart, because it's kind of an interesting chart. This here is a color change MACD. This is panel 1 up here, where I've got this ellipsis here and this arrow. The second area down here where I've got my color change MACD, that's panel 2. In panel 3, I've got an indicator that is named for the letters. It is called TDI, like Tom, David, India. And so this is the TDI. This indicator is the only indicator on this chart that you cannot get unless you subscribe to a particular service, and that service is 4 figures to the left of the decimal point to get the service and to get the training that they offer. So it's a little on the pricey side. This leading indicator is free. This color change MACD, free. This ANA trend line, super trend, that's free. These swing high, swing low lines, free. So everything on this chart is free with the exception of this indicator in the third panel. I have this indicator in the third panel because one of the traders that I know, she uses this indicator to scalp. And what scalp means is that you go in, you're not looking for a trend, you're looking for a trade where you're going to make 2 ticks. And so she gets in, takes 2 ticks, and gets out. And she gets in based on this indicator right here. She actually, when she makes her trade, she looks for this area that is a V. She looks for this pointy green here. What I look for on this indicator is I look for green over red, or red over green. But primarily, I'm looking for the green line to cross over the red. And on this indicator, down at the bottom, my leading indicator, I'm looking for this pointy peak here, this sharp angle on this line, on this green line, crossing over the red and heading up to the 0 line. And so that's what I'm looking for in my trade. When I placed this trade at 642, I made a long trade. That means that the market was, I was predicting that the market was going up based on this predictor down here, this indicator, my leading indicator. This leading indicator says, hey, Jim, the market's going up. Now, when I got into that trade, the market was clearly not going up. The market was going down. And I got into that trade at 2951.25. And on the right-hand side of my chart, you'll notice that on the right-hand side of the chart, over in this area over here, as I move my cursor up and down, you can see the price changing. And so I got in at 2951.25, and it went down to 2950.25, and then it went down to 2949.75 before it finally started to come back up, and I started finally in this area here. I started getting green candles, and got one or two red candles in a green box. This green box is a 5-minute box. These little candles are 1-minute candles within a 5-minute box. So I got out of that trade up here at 2952.25, but I was in that trade for 10 minutes. That is for me, that's a long time. I like to be in a trade and out of a trade, and I can be in a trade and out of a trade in about a minute and make 50 bucks. 50 bucks in a minute. I was in this trade here for 10 minutes, which is agony. I had some drawdown here, but the whole time I had that drawdown, what is my indicator telling me? My indicator, my leading indicator is moving up. After I got the signal here and I placed a trade at 642, I waited. And I waited 643, 644, 645. And through here at 645, 3 minutes after 642, I get a cross. I get a green over red cross on my TDI. Then at that same time, I go from green vertical lines on my color change MACD. I'm sorry, I go from a red area here, which is basically means go short. I get my first green indicator, my first green line, vertical line on my color change MACD, which means that the trade direction is headed upwards. Over here on the color change MACD, when it crosses over the line, when this little squiggly line crosses over the dark green line, that's a positive event. And when it goes above the 0 line, I know that that's a good trade. However, by that time, we're talking 654. I think I've mentioned in another video that I have a day job, and I usually quit at 7 o'clock. I could have made more money on this trade if I had stayed in this trade until 7:10 or 7:30 or 7:40. I mean, look, this indicator down here told me, Jim, get into this trade. But I don't have the luxury of being able to stay in that trade for for an hour. This is 7:50, and the market just starts to come down. This is the swing high on that trade, and the swing high on that trade was 2964.75. So 2964, and I got in at 2951. 51 from 64 is 13, and you multiply 13 times 4 is 52. And then you take half of 52, which is 26 times 10 is $260. So that was a $260 trade, and I got into that trade when everybody probably everybody else was following this TDI down, and they were following the color change MACD down, and they were following these red candles down. They probably went short on that trade. I didn't go short. I went long. I was crazy because I went long, and everything was. I had this 5-minute box pink, which means the market's going down. The next 5-minute box pink, which means the market's going down. here was the swing low at 29.50 even, and that was basically, I knew that when I started getting those dots, when those dots started printing down there for the low, that was probably going to be the low for this particular run, and that the market was going to churn up. Then I got this indicator here. What does it show? Shows that the market's making a change of direction. I get a confirmation over here on my color change MACD, and it's going up. And so I stay in the trade. And I stay in the trade until 6:52, which is when I exited the trade, and I got out at 6:52.49, and so almost 6:53 by the time I got out of that trade. But look at my leading. My leading indicator is going north. It did come back and touch the zero line. And so, but it didn't cross the zero line and made another peak here. Touch the zero line, another peak. Touch the zero line and kind of wiggle back and forth on this here. It did dip here, right in through here in this area right here. You can see where this leading dipped down. Well, if you follow this dip and you go up, you'll see that we had some red candles in through here. So this is a condition that my friends in the chat room, in the training area for FFTUG.com, they call this a shakeout. And you can see that, here we got red coming into the market, but we've got good, strong action, and our moving averages, this light green and the yellow, that's the light green is the 13, and the yellow is the 8, and those are headed upwards. And so then we get another cross. This comes down, but this comes back up. We got another cross, green over red, which is positive. We got this up above the zero line, headed back up into strong positive territory. So if you could have hung in there for this drawdown period, and what was the drawdown period? The drawdown period was 56.50 down to it was 4 ticks. So it wasn't that big. I had a 5-tick drawdown over here. I was at 51.25, and it went all the way down to 50.25. Did it go any lower than that? 50? I can't tell. I don't know if one of those tails might have penetrated that 29.50 and gone into 29.49.75. I'm not sure. But anyways, I had a 4 or 5 tick drawdown, not a big deal. This was, as I said, this was a live trade. And I'll just pull over my dome. There's $20 that I made on that trade. And you can see that that's what it looks like. This is the live dome. This is the simulated dome. I didn't do any sim trades this morning, nothing on the simulator. And I got in on this trade, and then I got out on this trade, and I told everybody in the chat room, hey, I'm gonna make this video. I'm gonna duck out. And then it was 7 or 5 after, and I got out of the chat room, and I left for work. Anyways, that's the video. I wanted to go over this, show you what I'm doing, show you my indicators, show you how I find trades to get into, what I look for, and just overall, just have fun trading. And I do want to tell you about our chat room. I'm going to post this. Video up on our main page, and it'll be available for the general public to see. I want to tell you about. We are running a special. If you're already a member of our community, of our chat room, and you're already a subscriber, you don't want to take. This is not something you want to take advantage of. This is a price that this is our special. We're currently offering chat room access every day, where we do training Monday through Thursday, and then we do also we do some more training and specific training on Fridays. Not every Friday, but we get together depending upon what our subscribers are looking for in training, and we get together and we offer training on Fridays. The last time we offered training, we talked about Fibonacci's, and we're going to talk about support resistance, those kinds of things in the future. But you get the full training room access every day, Monday through Thursday, and Friday. Coming soon, we're going to also be offering a night class. Probably going to be Sunday night. I don't know what the other 2 nights are going to be. The price of that class is going to be $15 a week. And we're going to trade in that class, we're going to trade 6J and 6A. And so we're going to trade those 2 instruments at night when the market is for 6J and 6A, seeing as how I am in the mountain time zone in the United States. 6J and 6A are opposite where I am at currently, and so the time zone over there is about 15 hours difference, 15 hours ahead. So, but if you click this link, http://bit.ly/PayPal special, if you click that link, you can take advantage of our the PayPal special that we're running right now. It's $40 a month. That's an automatic subscription. So when you sign up, you get a subscription. It rebills to your account every month. If you want to cancel, you can cancel, and But if once you start the subscription, you've got access for the whole month. There's no refunds. The training that we offer in there is the kind of training you want to take advantage of. You can hear other traders talk about trades that they are in. They are in live trades. Sometimes they're in sim trades. By sim, I mean simulator trades. And so it's hypothetical. It's not real money. But sometimes they're in live trades, like I made this trade this morning, and that was live. And we do that daily. We also have training videos by master trainers Dale, Dave, and Jim. I'm at the end of the list here because this is in alphabetical order: D-A-L, then D-A-V, and then Jim. That's probably a good place for me. Is at the end of the line. Oh, that was kind of funny. But anyways, we do live training, and we show you how to build charts that are going to help you make money. Specifically, I will show you how to build this chart. If you need information or you want any more information about our website, my email address is at the bottom with the asterisk. It's membership@fftug.com. Shoot me an email. Once I get the classes started on Sunday nights, probably not going to be able to answer you. Give me a day or so to weed through my email and answer your questions about anything that you might have a question about, whether it be the chat room or some video or some training or what have you. If you'd like to comment about this video, you can comment below this video. There should be a comment box. If you're not already registered on our website, you'd have to register to leave a comment. You're going to need your email address. We don't spam. We don't send out junk mail, but we do. We will, send you an announcement from time to time saying, hey, we got another special, or we have a training that we're going to be offering, and it's this is the price, or it's free, or what have you. So you will get email from us from time to time when you sign up. That's going to do it for this trade review. It's May 9th. This is the fftug.com. And I wish you happy trading. I always want you to remember to enter your targets and enter your stops. Bye for now.